Hi friends, I want to take just a minute and talk about investment fundamentals and the emotions that we're seeing in the markets. Many of you know Scott as our founder and chief executive officer, but he also heads our investment policy committee. And we have had our sleeves rolled up, as I'm sure you know, the last 150 days, trying to navigate amongst misinformation, volatile emotions, as well as a wild ride in the market. So I think one thing that I'd like you to speak to for a minute, Scott, is how do we make investment decisions in the middle of chaos?
Yeah, it's interesting. We really make investment decisions in the middle of chaos the same way we do when there's no chaos. Fundamentals rule the day. And our three pillars continue to stand, which is don't fight the Fed, don't fight the trend, and the most important, beware the crowd at extremes. But in the short term, emotions drive the markets. And many of you know we've been taking advantage of those emotions the last 90 days, which really kicked up our trading. We became robust, I would say, in our trading activity. And our clients, you've seen the benefits of that. And over the last really 2 weeks, 3 weeks, the markets have hit the targets we were talking about. You've been very diligent of keeping us on track, speaking to our clients and the prospects out there who are thinking about Pyle Financial, that fundamentals are in place.
That's right.
And we now, in many of our stocks, our ETFs, and our sectors have hit their targets. And we've built cash back up now, and we're ready. We're ready for the next 5 months.
That's right. We were talking right before this, and we mentioned while we've never been here before, we've been here before.
Right.
And really, over the last 35 years that you've been in wealth management and the 175 years that our team has, it's really same story, different headline.
That's right. I mean, they call it black swan, events. We've had so many events that in the short term create chaos. But in the long term, fundamentals consistently overcome the emotion. But again, I can't stress enough is that beware the crowd at extremes. So in March, when everybody was freaking out and getting out of the market, what were we doing? We were starting to add into our positions. And now everybody's pretty excited about the NASDAQ and Tesla and technology and all of that. And we've been reducing our exposure.
That's right. Now, we don't know what the next 5 months will hold. It will certainly hold some curveballs.
You think?
Yeah. Not many fastballs lately.
Nope.
How do you see the next 5 months playing out from an investment perspective with so much hanging in the balance?
Well, I think our two key words for the year still are intact, which was volatility, and the real technical term was weird. And we're still there. We've really been waiting for the election time to kick in, but we do expect to see, in the face of protests, riots, unemployment, re-engagement of COVID, go to school, don't go to school, all this will create some volatility. And regardless of who wins the presidency, we are in the need of economic recovery. Stimulus will stay intact, and we really see the markets continuing to grow throughout the first quarter of next year. The S&P is around 3,200.
That's right.
And we were at 3,250 into the year, and one of our economists even has a 3,600 stretch target, but that was more around 12 months. So.
Yeah. And I specifically like the way that you've positioned client portfolios in that we really like the sectors we have, and we've got large cash balances.
Yes.
And so whatever the next 5 months hold, we feel ready, we feel dialed in, and we feel nimble.
Yes.
Which is
nimble and tactical.
That's right. Good. Thanks for watching. We'll see you next time.